Okay, so today, I have this under Chapter 5 agendas, but chances are we're not even going to get to anything in Chapter 5 yet, which is fine. We've got enough time to cover Chapter 5. I think we've got 4 additional days or something like that. What we're going to do today, I'm going to go through and introduce you to Iowa withholding and some of the I don't want to go into a lot of detail about it. I just want to introduce it to you, give you an idea of how it's done. We'll look at the Iowa W-4 form, end up talking just a little bit about the quarterly reports that are filed. And then I want to move on to talk about the final project. You have a Chapter 7 in this class is a final project. It's not, so I don't do any lecture on Chapter 7. The lecture stuff ends with Chapter 6, but the final project, which you have access to now, is going to be due the last day of the semester, December 11th. And what it is, it's a simulation of a payroll program. And there's like 5 modules in it that you complete. The first module is like a tutorial, and that's kind of what I want to go through with you today to introduce you to it so that you can get started on working on it. It's one of those things that you probably don't want to leave until the last minute. If you can get it done, work on it a little bit at a time, you'll probably be happy about that you're not then cramming it in to try and get it done right before December 11th. So I'm going to go through and we're going to look at that. And then if we have time after that, we'll start on Chapter 5. The last class, I didn't have time. We really just spent a lot of our time on the final project. What else do I want to say? So I want to take a look real quick at the overall schedule, just to kind of show you what we've got left. So as far as like lectures, we've got Chapter 5 and Chapter 6 left. Chapter 5, we're going to talk about unemployment, taxes. There's not quite as much material in this chapter, but students kind of can get hung up on it because it's something that's completely new to them. If you've never been on the payroll preparation end of the payroll process, you've only been the recipient of payroll, then the unemployment taxes are not something that you've ever had to deal with, because unemployment taxes are calculated and paid entirely by the employer. The employee never pays any federal unemployment taxes. So there are 2 unemployment taxes. There's a federal unemployment tax, there's a state unemployment tax. The employee never pays any of the federal unemployment tax. In some states, the employees do pay a portion of the state unemployment taxes. In Iowa, that is not the case. I mean, we all pay it in the form of reduced wages, right? If the employer is paying this tax, then that means that our wages that we actually can receive are probably going to be reduced somewhat, but we don't pay it directly. And so a lot of students, because they're not familiar with it, it's a completely new concept. That's where they may get hung up. But as far as like the depth of the material, it's nothing like Chapter 4, what we just went through. The calculations are easier as well. So that's what we're going to cover in Chapter 5. Chapter 6 is where we're going to kind of all put it all together, and how all this information that we now know how to calculate and compute, how do we integrate that into the financial system? So we have to, all of the transactions that we're creating through, we have payroll expenses, we have accruals that we are creating, amounts that we're going to have to pay in the future for taxes. All of these calculations are hitting different accounting accounts, right? Different accounts in the chart of accounts. So how do we create the journal entries that are necessary in order to accurately reflect all of those transactions in the financial accounting system? So that's what Chapter 6 covers. And this Chapter 7, like I said, Chapter 7 is not a lecture chapter. It is simply that final project where you kind of take all that information that you've had, and you put it into a mock payroll system. Now, the good news about the Chapter 7 is you actually don't have to calculate what the tax withholding is. So whereas, your homework, you've got a lot of problems right now where you're calculating that income tax withholding. When you start working in Chapter 7 and the payroll project, you don't have to actually do the calculations. The system does it for you. But it's a practice in how we enter that information into the system. So, excuse me just a second. We've got Thanksgiving in here, so in a couple of weeks, Thursday the 27th, our Thanksgiving break, you will have a comprehensive final. It is not as involved as the midterm was. It's a shorter final. We're going to take it in class on the last day of class, which is December 11th. We don't have finals weeks anymore. What they've done, and I think I mentioned this at the beginning of this semester, they've done away with the finals week, and now we just have regular classes in that last week. So it used to be we had a 2-hour class period for finals. I think what they found was a lot of professors weren't using that time for finals, or were doing other things. But so now we have class periods, so we're going to do that on the last day. We'll do some review on the day before that as well, review for that exam. You will get to, just like with the midterm, you'll get to use a sheet of notes that you create, as well as a scratch sheet of paper. It's really an overview of the whole class. But we'll go through in more detail when we get closer to that time what exactly is on that. It's only, I think it's 30 questions. It's 50 points, so it's not worth as much as the midterm exam was, because we've got the final project. So that final project is more like your final exam, at least for this class. And that final project is going to be due on the 11th as well. So that's what we have left, like 5 weeks left, something like that. Hard to believe. These semesters go so fast. Any questions about the schedule? Anything? Okay. If you haven't, make sure you register for classes for spring semester. Okay, make sure you do that. Get that out of the way. All right, so let's take a look at Iowa withholding. We're going to start out by looking at the W-4 form for Iowa. Now, just like with the federal W-4 form and federal tax law, we've had a lot of changes in the last few years for Iowa. Most of the changes that we are covering for the federal withholding occurred back in 2017. The tax law occurred in 2017. The actual withholding changes were implemented starting in 2020. For Iowa, there'll be more changes starting next year, because we also had a big tax law that was just passed that will change that W-4 form. But in Iowa, we also had some major changes to our income tax structure and our withholding. It happened a little bit more recently, so we had a change to the W-4 and the calculations for the W-4 there would have been a change in 2023, but then also a change from 2024 to 2025, because we've been implementing these tax changes. What we're doing in Iowa, what we have done in Iowa, we moved from a progressive tax structure where, that progressive tax structure, if you recall, is the more you make, the more they take. So the higher your income, the higher your tax rate as well. We moved from that to a flat tax. So now everybody, doesn't matter what your income is, all taxable income in Iowa is subject to a tax rate of 3.8%. Doesn't matter if your income's $10,000, taxable income $10,000, taxable income's $100,000, $1 million, 3.8% is the tax rate. So as a result of that, we had to change the W-4 as well. So what I want to go through here is just the 2025 W-4. So if you were to start a job before December, this is the form that you would fill out. So we've got our filing statuses: single, head of household, married, filing jointly, surviving spouse. So it's kind of the same concept as with the federal form. Information about name, social security number, address, all of that stuff. There is a spot if you are exempt from Iowa taxation. You can enter exempt, same parameters as far as you can only be exempt if you didn't have any tax liability last year, and you don't think you're going to have any tax liability this year. So just exactly the same as that federal requirement. Different from the federal requirement, though, is you don't have to fill, if you're exempt, you do not have to fill one of these out every year. You only have to fill out a new one if that exempt status changes. So you can see here they talk about personal allowances on the Iowa form. So remember, the old method of federal withholding, we had those personal allowances as well, but they were based on numbers. So do you have one personal allowance, or two, or three, or four, or five? On the Iowa form, we have personal allowances as well, but they're based on dollar amounts. So what they tell you, and there are instructions on the second page of this, is how you calculate those personal allowances. So the personal allowances, they're very small. So remember those allowances and they're not based on, in the calculation of withholding, they're not based on how frequently you're paid. They're just flat amounts. Excuse me. And they're very small amounts. So you get a $40 allowance essentially for about each person on your tax return. $40 allowance for yourself, $80 if you're unmarried and head of household, additional $20 allowance if you're 65 or older, and $20 allowance if you're blind. If you're married and your spouse doesn't work, or they're not claiming any allowances on their W-4, then you can add $40 for your spouse. So let's just say you're head of household in this instance, then you would enter 80 because you get 40 for yourself, and then you get an additional 40 because of that filing status for head of household. Then you get $40 for each of your dependents. So if I had 2 kids and was filing as head of household, I'd enter 80 here as well. Again, these are dollar amounts. We have some additional allowances for itemized deductions. So Iowa uses the federal standard deduction, but if you have itemized deductions that are higher than the federal standard deduction, you can itemize your deductions. So there's a worksheet for that. Allowances for adjustments to income. These are items that show up on the Schedule 1 of the Form 1040. These are things like retirement contributions that are made separate from your employer. So if you have your own like IRA and you're contributing, that would be, and it's going to end up on your Schedule 1 of your federal form, that would be entered there. If you have any student loan interest that you get an allowance for or an adjustment for, that would be added there as well. And again, it's based on a dollar amount. If you qualify in Iowa for the Child and Dependent Care Credit, which is different from the qualifications at the federal level for the child care credit, there are no income limitations at the federal level, but there are income limitations for Iowa. But there's a separate worksheet for that, or not worksheet, but instructions then for calculating what that is. That amount that you would get, that would be added there. And then you add them all together. And like I said, this is actually a dollar amount. It's not the numbers that we would use. So in this case, we would put down $160 for our total allowances. And then again, any additional amount that you would want deducted, like if you want an additional $50 every pay period deducted. You would enter that here on the form, sign it, employer enters their information on it, and that's the W-4. Just like the federal W-4, this doesn't go anywhere. It stays with the employer unless the Iowa Department of Revenue comes in and wants to take a look at it. All of the specific instructions for what I just talked about are there on the next 2 pages. Now, one of the things that is attached to this W-4 is the centralized employee registry reporting form. This is the form that employers have to fill out, and the employee has to fill out, that does get sent into the state to match the employee's information against a child support or other types of garnishment database. So this information, the employer fills out the first part, employee fills out the next part. Now they ask about dependent health care coverage, whether health care coverage is available through the employer, the employee's start date, the employee's date of birth, all of that, social security number. And then this form, it's usually faxed in to this phone number. It can also be mailed in, but it is sent in. So the first part of that W-4 is not sent anywhere, but this is sent into the state. And again, it's to match the employee's information against their database so that if there are any garnishments that need to apply to the employee, the employer will then receive, the employer notifies the state then notifies the employer, hey, this person has a garnishment, you need to withhold this much for child support, starting on or after this, or on or before this date. Let's see. So that's it. That's the W-4 for Iowa. The calculation, it's a little weird. So first off, Iowa does have tables. And they've got these, if you go to the Iowa Department of Revenue website, and I've got a link in the agenda here to this site, you can download all the tables, or you can download based on the pay frequency. All the tables obviously have all of them. And then instructions as well are listed here and here. I've already downloaded them, so that's what these are. You'll see that for the tables, the filing status and the frequency of pay is down here. Each one has its own tab. And so this works just like the federal tables, in that if it falls on the line, you're going to use the next line up for it. Let me see if I can make this any bigger. That's a little bit better. A little bit more. There we go. So here we've got a biweekly table for, this is for 2026, actually. So we would have to pull up the 2025s if we were using 2025, but this is the withholding amount. Taxable wages over here to the left. We've got the correct filing status table, so we need to make sure we're on the correct table. This is for head of household. Up here, the total withholding allowances claimed. So that's from the W-4, and that's the amount that's on this line here, line 6. So if we were head of household and we had claimed $160, well, here's our column here that we would take a look at if we have a biweekly pay of, let's say, $23.05, then the amount to withhold is going to be this $53.13. So the table is pretty easy to use, just like the tables at the federal level. If the amount exceeds, so if biweekly wages are at least $4,000, multiply any excess over $39.90 by 3.8%, and then add it to the amount that you just pulled up. So you can just take a percentage. So for example, if it was $5,000, so we would take 5,000 minus 39.90. So the excess is 1,010. Multiply that by 0.038, $38.38. We would find the column that applies to us. If it was the 160, it would be this column here. And then we're just going to take the 116.97 and add it to that 38 that we just calculated. Now the amount to withhold is 155.35. So quite a bit easier. There's also this withholding formula that can be used. It's a little bit more complex. It's a little weird how they put this together. So like you have to know what the definitions are for their references or their factors in these equations. So like they say, the step one is T1 equals G minus D. All right, well, we've got to figure out what T1 is. But first we've got to figure out what G is, and we've got to figure out what D is. So they go through and identify how we define those. So G is taxable wages. D would be the deduction for the period. So the deduction for the period is going to relate to these amounts down here. If it's a new W-2 or a new W-4 form, we use this table based on the how frequently they're paid and what their filing status is. That's the deduction amount. If it's an older W-4, now the older W-4s didn't have the filing status, they just had married or single. So for Iowa, it was the same as the federal. This is the table that would be used if you're single or if you're married. So that would be the deduction amount. Step two, that result, you're going to then just multiply it by 3.8%. So, and then we subtract this amount, the allowances, divided by the number of pay periods. That's what we subtract then from the ultimate number to get what the withholding is. Using the tables is a lot easier, especially since they've accounted for the fact that you can use the table and then doesn't matter what the income amount is. Right, so you can go up to infinity for that income amount. Yeah, so that's pretty much it for Iowa. All of this is found on the Iowa Department of Revenue website, all the withholding information, the W-4 as well, information about withholding due dates. So when does the forms, so employers have to, just like we have 941s that are due on a quarterly basis, Iowa withholding is also due, and it may be due on a monthly basis, it may be due on a quarterly basis, depending upon how much is owed. So filing frequency. So here you can pay quarterly if you owe less than $6,000 per tax year. You have to pay monthly if it's between $6,000 and $120,000. This is the amount of withholding, Iowa state withholding, that is due semi-monthly if you owe more than $120,000 in a tax year. So your filing or your payment frequency and your filing frequency depends upon how much you owe in those state taxes. What else do I want to say? I already talked about the fact that the Iowa information is reported to employees on their W-2 form. That's at the bottom of the W-2, which would include how much in Iowa taxable wages the employee received, as well as how much was withheld for Iowa taxes. And then we've got those quarterly reports as well that are filed. So just kind of a little overview of Iowa. Like I said, you don't have to know the details of it. But I mean, I think it's, the instructions are pretty clear on how it's done. So, I think any of you would be able to handle figuring out what that Iowa withholding is. Any questions on that? Okay.